Eddie Speed joins me here again. I really appreciate your time, Eddie. This is always a treat. You could learn more by going to noteschool.com/REI mastermind, noteschool.com/REI mastermind. And you can imagine we're going to be talking about note investing here today. So really appreciate your time here, Eddie.
Yes, sir.
So you had mentioned that, first of all, kind of a spoiler alert, you have a book that's available with all the common questions that you get peppered with regarding note investing. And you typically give that out to people who attend some of your sessions.
That's the address that you gave them at the end. It's a master class, and we've learned in notes, it's really meaningful if you can kind of whiteboard out examples, right? Use case studies and show them. We use the term financial modeling, but we show people what that math looks like. And along with that, then all of a sudden people become curious and they say, I wonder about this and I wonder about that. And so we have recorded what we believe are the most common 150 questions that people have about the industry. And so it's a Q&A book, and it's kind of a different style, but it seems to fit really well. Most people come back and tell us like that really was helpful. And I didn't have to commit to read it all at one time. And I reread some of it and stuff. So it's really it's a book, but it's a learning index, really.
Yeah. So this is going to be under my wife's to her, close to her heart, because she's always mentioned the concept of how, and she's asked multiple times on how could we possibly become the bank in some situations,
Yeah.
because you can drive around town and actually see how lucrative it is for a lot of people.
Exactly. Yeah, it's a good business. I think, as you know, market timing is more important than any other element in business, right? And so the timing for us to do this now is better than certain other things, or at least it's arguable. And so I think we've seen a whole lot of people do two things. They've come to buy notes or bought into investing in rental properties. That could be a syndication, could be a single asset that they own. And the other thing that we've seen more than I've ever seen in the industry in the last 18 months, I've seen more people take their rental property and turn it into a seller finance note. And you're saying, well, why would they do that? Well, they're usually getting about 15 to 20% cash down up front. And based on net income of a rental and net income on a note, it's 2.5 to 3 times more money to sell it and carry the note than it is just to rent it. And so that's pretty good math. And so that's why people like doing it.
You know, and I'm glad you pointed that out initially, because a lot of people are going to, when it comes to rental property, we're told multiple times we have the for profit centers.
Yeah.
And it's sometimes hard for people to make that jump, because you do lose out on a couple of those profit centers, but when you're talking about 2 to 3 times more, I mean,
Well,
more
there's
than
an
makes up for
argument,
it.
right? There's not a tax benefit to creating notes. There's a tax benefit in rentals, but it is a deferral. It's not a tax savings. It's a lot of times misstated. People say, I'm going to save my taxes. No, you're going to defer your taxes. A lot of difference between deferral and not paying them, right?
Mhm.
And then the second thing is people say, well, I miss appreciation. And I can show you mathematically that your property would have to appreciate at an insane rate to be more money for you to rent it than to carry a note on it. Now, there's a reason that that's true. And that is people's mortgage payment on the same house averages about 150% of what they're paying in rent today. Now, that's not true in every market. Some markets it's 110%, and some markets 180%. I'm in Dallas, Texas. In Dallas, Texas, the number is 135%. So your mortgage payment at a non-QM rate, which is 40% of the loan origination business today, your mortgage payment is 140% of what you pay for rent on the identical same house. And so the market conditions, because of price and inflation and interest rates have caused this kind of, I'll call it the perfect storm. Some people in rental property business wouldn't call it necessarily the perfect storm, but it is a market condition. And so that's why we understand that. And that's also kind of why people have shifted to buy notes today.
Is it where should like somebody who is intrigued by this, where would the best place for them to begin? Having a rental property, maybe you convert it to some sort of note situation. So you're creating a note,
Yep.
or buying notes that are available on the open market.
So I'm a well-known guy in the seller finance space. I bought 50,000 seller finance notes. We have a very active business product that we do of chasing notes every day. There's about 100,000 seller finance notes created every year. Most of the notes I buy are from professional real estate investors. A lot of them, we basically have kind of a mortgage banking relationship with them. That means I give them a matrix of how to make their notes before they make them. I give them a recipe. And so we take seller financing and mortgage banking and kind of tie it together so they're creating good product. That makes sense. And so they're not just accidentally doing this. They're doing it because we're teaching them how to make better notes. And then they want to sell those notes and they sell them to us in the secondary market. And that's how we create inventory. And that's how I've done so much business. If you say, how in the world have you bought 50,000 seller finance notes? It's because I helped real estate investors build a business around creating seller financing, some of which they, more than half of which they chose to sell their note. And so I got to be their note buyer because I helped them with how to make a better note.
So I can imagine that you've probably seen quite a few examples then on bad setup when it comes to these note creations. Yeah. What are some of those pitfalls that people need to be aware of?
Yeah, I'll give you a stat. Best we can estimate, I've looked at between 300,000 and 400,000 owner finance notes, right? And I bought 50,000. So between the ones I looked at and the ones that I bought, I've seen a lot of recurring mistakes, right? The first thing I would say to you is the whole concept of seller financing is pretty simple, right? It starts out with good property. When you go to a prime steakhouse, they start out with a good steak, right? So I start out with a good piece of real estate, right? I try to help people in how to construct their notes. I want notes that look homogeneous. I don't want a bunch of homemade cowboy looking stuff. Like every real estate investor in the world, yeah, I create all my notes on land contracts. Well, I bought 15, 20,000 land contracts. So it's not like I don't understand it. It's just not as valuable as doing it and looking like a mortgage company. Right. And a lot of the reasons that people do it are kind of an old reason. It really wouldn't apply to today's laws. So they think they're never going to have to foreclose. Well, I'm pretty sure the state statutes today, in most instances, say you're still going to have to foreclose. Maybe there's a level of sophistication we could take you to that, as I said, kind of pasting mortgage banking over the top of it. So I teach people to create homogeneous loans. I teach them how to structure the loans in the right way, so that they have the proper down payment and that the loans are structured and stuff so that if they go to sell the loan, it's going to bring top dollar. And so the thing is when you do that, you start really realizing you were in the real estate business until the day you sold your property and owner financed it. And the second that you did that, you became a mortgage banker. So do you know how to be a mortgage banker? Oh, wait a minute. Maybe Eddie could help us learn how to be that, right? So those are the things I do to go attract good inventory so that your wife can buy good notes.
I think that's really an important point that you just made regarding you're no longer an real estate investor. You're a mortgage banker.
Yeah.
I have to point out too, and maybe it's just the industry that we happen to be in, Eddie, is the fact that it seems like I run into quite a few people who struggle with the mindset of seeing help from a person like you, Eddie, as an investment versus it being an expense and them trying to justify it. Believe me, they're going to pay for it one way or another.
Let's be honest about it. everybody on this podcast has either been pitched education or sold education. And there's some charlatans in the business. There's really good people. There's some people that aren't so good, right? And I think you start back with kind of understanding why somebody trains people and what they do. I train real estate investors how to make notes for free. I'm not trying to hook them into note school. I'm not trying to do any of that stuff. They can come to us and just say, help me make better notes. And we'll do it. We'll do it and help them do it, because that's how I create my inventory. Somebody like your wife who wants to learn how to buy notes, well, there's two ways to do it. She can go learn everything I've learned, but what I offer her is a compression of time, a compression of experiences. And that's why I built a school, right? Let's look at a current market day analysis. I've got $250,000 to invest, right? What do I want to invest in? I like real estate. Okay. Well, I can invest in a syndication. Now, the problem is I got no control. And whether everybody in your audience believes it or doesn't believe it, any significant level of due diligence would say that the multifamily space has experienced a slide, and the projections are for a continued slide. The bomb's not over, right? And so you're investing in a market that you have no control. And, if you're investing in a new deal today, the market timing just isn't super great for that. That doesn't mean there's not any good deals in any single asset class, but you'd have to be more selective today than you may have had to be in other market conditions, right? So the problem with the syndication is you don't have control, right? You have passive, but you don't have control. Then you can swing the other way and you say, well, I'm going to have rental property. Well, what do you have there? You have too much control, right? You get headaches with dealing with rentals and tenants and all that stuff, right? And today, a rental property doesn't have the cash flow model that it's had in previous years. Properties have gone up in value, expenses have gone up, and rents have gone up, but they didn't go up proportionally, right? Rents went up at 25%, expenses went up 50 or 60%, paced with expenses, because that's not what people tell us. That's not what the modeling tells us. So I've got $250,000. What would I invest in? Well, I can have a rent house. It could be in Dallas. It can rent for $1,800 a month, and I'm on net $900. I can take a note and invest $250,000, and the average income that $250,000 buys this year with people that are in our, within our lineage is $2,700. So you have $2,700 in income or $900. Now, okay, I have a servicing fee on the note. Let's take that off. So maybe you have to buy two notes to spend $250,000. So $65 a month servicing fee. So now you're netting $2,635. So $2,600, $900. And that really is about where the math is. And so for those reasons, you have a lot less stress. You have more cash flow. And oh, by the way, you have a cushion. So see, if you buy a rent house for $250,000, you have $250,000 of your money in the deal. Something goes wrong, you don't really have much of a cushion. But if you buy $250,000 worth of notes, the collateral securing the property is worth more than what you invested in the notes. And so there's a cushion factor. The property could be worth $325. It could be worth $350. You're not wanting anything bad to happen to the borrower that's living in the house, but you do have a cushion that you don't have in a brand new investment of a rental. And once again, this is a style thing, right? Like people look at these businesses and say, well, I want to be this or that and stuff. And, I would tell you that I have a great story about an eye doctor named Emily Thompson in Oklahoma City. And she was the wife of a real estate investor, and his whole portfolio was rental properties. Now, he's a good husband, and he come and hung out with her. Jason, really cool guy. he come and hung out with her. And initially when he came to note school and did these things with us, he was just supporting his wife. But now all of a sudden he's like, whoa, that's not illogical. All of a sudden you start seeing him shift. And that doesn't mean he sold every rental he's got, but it means that he clearly diversified how he did it. And it's just because he's smart. He's an ex-engineer, we train a lot of those guys too. And he's just good at math. And the math we were saying was absolutely tracked. It was undeniable. So here's the question. If all things were equal, would you rather be a landlord or the bank?
Yeah. One of those things that I think is, and we're going to get into when we close out the episode, my rapid fire questions. But to kind of spoil it a little bit is the fact that one question I ask is, what lie do real estate investors sometimes tell themselves? I think that's one of the big ones there is when it comes to single family homes, especially, I think we've been sold a bill of goods on this. The concept of getting $200-$300 per door in cash flow, it gets wiped out every single time when the air conditioner goes out or what we would consider a minor thing. We kind of remove that type of hassle with what you're proposing.
Yeah, the math that I'm giving you, the percentages, I've vetted this with extremely sophisticated landlords that have substantial portfolios of rentals, like 100 to 300 houses. They all tell me that the math that I'm operating off of, which are considered to be industry standards, but they're confirming to me it's true. And the other thing is, the hassle factor, right? And so I believe, and this is a made up number. So just excuse me if I got this saying from my pastor at my church, right? A preacher number, right? So this may be a preacher number a little bit, but I think it's pretty close to the truth. I can own 55 rentals or 1,000 notes with the same level of aggravation.
Just remind everybody, head over to noteschool.com/REI Mastermind, noteschool.com/REI Mastermind. See how Eddie and his team can help you with this. And if you're finding us on YouTube, give us a quick like and subscribe. And if you have an investor friend that might be interested in this, why don't you share this episode? It'd do us a great favor. So, Eddie, when we are talking about, most people get into real estate investing to achieve what is this concept of financial freedom. However, I was hoping you could expound on it a little bit more. Real estate investing isn't a light lift. Nobody gets into this, and we've been sold this concept that it is mailbox money in some regards. Can you compare what you're discussing regarding the effort versus what we're used to?
First of all, one of the very first things we try to teach somebody is what's a good note and what's a bad note. Not every note is a good note, right? There's a difference between being a slumlord and having, rental properties on executive homes. We agree with that?
Absolutely.
So it's the same thing in notes. So I don't buy junky notes. I've been doing this for 44 years, right? I've already tested all the other waters that I'm telling you not to test. I already know what will cause you grief, right? But if you pick the right kind of notes, and I believe that you can, then your workload is predominantly on the servicer, right? You have them third-party service. They're the ones that's going to deal with the borrower, do the compliance that is required by law, do the disclosures, do all of that stuff, talk to the borrower if needs be, whether it's, it's about their escrow account or whether it's about, hey, your payment was due on the 5th and now it's the 15th and we hadn't seen it. What's the deal and stuff? Most people that I see that own a portfolio of 20 to 40 notes tell me that they can do their book work. I've had numerous people on our podcast that I knew that own that level of notes because they bought them through us. And they're telling me that their workload was an hour and a half, 5 hours a month. And, and that's pretty good to have that level of notes. Like we're not talking about one or two notes. And so there's certain things, certain blueprints that we help people with. If you own a note and you're monitoring your servicer, here's what you do and here's what that looks like. So it's just a lot less work and so people like it for that. And it does have way better cash flow. And those are the two things that I think you and I hear frequently. We've kind of been sold and that is, you buy them and they're going to be a cash cow and all this kind of stuff. And, here's the problem. The problem is that we have to look at math, and the math today is very inflationary math. I remember when inflation really started hopping. This is 2021, 22, right? The inflation was really jumping. And I suspect, Jack, you and I are on some of the same real estate mastermind threads of people that we consider to be credible, right?
Yep.
Even the credible people would jump on there and say, man, I tell you, this is the thing to have in inflation is rental properties. And my attorney, Jeff Watson, who you probably know, I remember sitting with Jeff on the side and saying, Jeff, I'm telling you right now, some of our real estate buddies are fixing to find out what they're saying is wrong. I said, because I started in this industry in 1980. And I said, I'm telling you right now that they can be fooled by thinking that rents are going to pace with everything else. And he looks back now and tells me, he says, you were right. And I said, no, it's just experience. I mean, sometimes you don't have to be the smartest guy in the world if you just have a decent memory.
You mentioned leveraging a servicer for this. And I think this is going to be kind of a unique concept for people as well. It would only make sense that there would be a servicer for these notes. And you also mentioned that they're going to keep an eye on escrowing and all that. Could you break that concept down a little bit and how to select a proper servicer?
Yeah. So I think we can help guide the industry and servicers based on what our experience is. We kind of know who are better operators. I try not to promote any servicer that I just think sucks. There's different servicers. Some of them charge a little different price and they have a little different level of deliverable, right? But the reality is there are specialty servicers that do handle private notes. Seller financing are considered private notes. They're licensed, they're compliant, and they're professionals. Like they know how to handle escrow accounts. They know how to do it compliantly. In a lot of places, you need a license to service. Most everybody listening to this has a mortgage. Not everybody, but most people do, or they've had a mortgage in the past. Well, guess who you're paying? You're paying a servicer that the people that actually own your paper hired to service your loans. That's who you're paying. And so you just don't realize it. You think that Mr. Cooper owns your mortgage. Well, the truth of the matter is probably not. They probably are just servicing the loans for some mortgage-backed security or some bank or some hedge fund that actually owns your loans. And so it's done in the mortgage banking industry every day. Everybody understands it. And so we've just taken those concepts and applied it to seller financing.
So these servicers, let's face fact, when we're talking about some of these notes, you're going to end up having to foreclose and take the property back. Do you find that some servicers are proactive in that regard, that they'll initiate the process, or is that require the note owner to get involved?
So there are servicers that have foreclosure oversight. They will manage a foreclosure process. They will make sure that force-placed insurance and the taxes are paid and all the things that you need to know to understand foreclosure oversight, right? There's certain things that have to happen other than just the attorney foreclosing. You got to go protect the asset, and make sure if the property's vacated, you got to have it secured and winterized and all those things. And yes, there are servicers that have all of that battery of services, and there's other servicers that don't really have as much. And so as somebody kind of gets involved and deeper in our community, then we start pointing them to, these are guys that we have found to be better at this, and these are guys that we found to be worse at this. You might find this shocking, but usually the cheapest servicers have the worst service.
So you're saying you get what you pay for?
It's kind of like that in life, right?
Eddie, this has been such a fantastic conversation. I was hoping we could spend the last few minutes together with you kind of sharing another story around somebody that you've helped through this process and where they are today in their journey.
Well, I can think of a lot of people, but I'm going to narrow it down. This guy's name is Tom Force. He is a retired American airline captain. So he joined Note School because he was getting sunsetted as a pilot. He was aging out. He was going to turn 65 and he is required by American Airlines to retire. So he started with me about 3 years in advance. And his mission was he wanted to replace his captain's salary with note income. And so he got involved. We have a community. He got involved in that. And so he started progressing, and I had him on our podcast about 10 or 11 months before he actually was going to be forced to retire, which was this summer around July, and where he had made his last flight. So this was late last summer or early fall of last year. And he had surpassed his goal already. So he'd done it in just about 2 years. And he was just saying that he wanted the freedom. I see him, he'll post on Facebook, his wife and he are in Italy, or they're this or they're that and stuff. And he's got a great mind and he's going to be busy doing things. So he kind of works on notes in other areas and stuff, but his portfolio of notes doesn't take a lot of his time. So he can take off and go do whatever. And he'll get a little more on the active side of the business doing things just because he'll get bored. But really, his mission was to take the note strategy because of cash flow, because of time freedom, because of risk freedom, to replace that. And he had done rental properties and his whole family's in some form of real estate. And he said, look, I know I don't want those things. I'm not looking for the grind. I'm looking for something that gives me higher income, less stress, and something that I don't have to go prop up a business all the time with, right? And so he did that, and it's a cool story. I don't know that countless is a fair word, although it's probably true that if I thought about it very long, I could probably come up with almost a countless number of people that have done that. I tell people, Note School is a home for burnout landlords. That's kind of what we are. Now, some people say, well, I've never had rental property. Okay, well, I never had rental property either. I started straight into notes. At 20 years old, my father-in-law taught me this business. Now, I've subsequently had rental property, so I got over that. And, I'm kind of back to, liking notes is what I do. But I was introduced into notes first, although my father-in-law, who taught me the business, was an old landlord. So I'm kind of somewhat heard about rentals and found some good in notes in a way that I liked. We are an alternative to traditional real estate investing is what I would say.
Well, just one last question regarding that, and let's broach the subject. What financial hurdle does somebody have to clear for it to make sense for them to use some of their capital for this? Because I would imagine they should have the money in hand versus having some sort of banking.
One of the things that we're really good at is showing people financial modeling using various ways of leveraging notes. And so we're good at that. So people kind of get a little bit scared. I'd have to have millions of dollars to go do it. And the answer is you need some investable capital. We're not a home for the broke and desperate, right? I mean, all these gurus that say that that's what, like, you go there, because that's not going to be us, right? Mm-hmm. Our average customer is a little older, right? Now we have some young people in their 30s stories, so that's not at all. But most of our people are a little age. They're cusping gray hair, or they've already had it, and they're not satisfied with where they are, and they're looking for some peace in their life. And so, they need some investable capital, but they don't need millions of dollars to go make it work, because there are financial modeling techniques that you can do some leveraging, and we're good at teaching that. So we can help them with how to go use other people's money and how to position it in a way that can make sense.
So could you kind of give us an idea on the low end? Like, what would somebody need?
$50 to $100 grand.
Sure. No, I appreciate you being that transparent on that. But Eddie, this is always such a pleasure to talk to you. Again, it's noteschool.com/REI mastermind, noteschool.com/REI mastermind. Eddie, if you're ready, we'll jump into the rapid fire questions unless you have something else that we should have covered that we might have missed.
Well, I tell you what, you did such a great job of the interview. I couldn't really think of any area that we didn't get to talk about at least a little bit that would be relevant for a first conversation with people. So you did an awesome job of that.
Well, I appreciate that. Well, if you're ready, Eddie, we'll jump into these and we'll close out this episode.
Let's do it.
What lie do real estate investors sometimes tell themselves?
My spreadsheet matches my checking account.
If you could go back in time and give your younger self one piece of advice, what would that be?
Trust but verify.
Do you have a book recommendation or what are you reading right now?
I think all of us end up a lot of our life negotiating, and I'm going to go back to an old standby that you probably have heard many people say, but it's still a good one, and that is never split the difference.
Yeah, that's a great book. In fact, we just had a conversation about that a little bit on Twitter. We had some discussions on that again. And then lastly, what single strategy, process, or tool have you implemented that has had the biggest time-saving impact to you or your business?
Helping people manufacture notes has brought me good notes without having to go search through a bunch of junk.
Yeah, that's really kind of an underserved area. So I really appreciate your time again. This was fantastic. Again, it's noteschool.com/REI mastermind. I hope you'll consider coming back again sometime, Eddie. And maybe next time it would be great to discuss with you on just building a business and scaling like you have had to do.
Yes, sir. I'd love to.